I'm Kevin McCormick of Kiplinger's to try to untangle confusion about an arcane tax law that can trip up investors. I'm talking about the wash sale rule. It's easiest to understand if you think about what it's designed to prevent. Let's say you own stock that shows a substantial paper loss. Although you're confident that the price will recover, you dump the shares, claim a loss to cut your tax bill, and then buy back the stock so you can cash in on the rebound. Not so fast. It will work, but only if you wait 30 days to rebuy the shares. Otherwise, the IRS will ignore the sale and deny the loss. It sees the deal as a wash, since you wind up with the same stock in your portfolio. The wash sale rule applies if within 30 days before or after the sale of securities showing a loss, you buy substantially identical securities. Now, there's no precise definition of substantially identical, but the rule clearly puts the kibosh on buying and selling shares of the same company. Although you can't claim the tax loss on a wash sale, it's really postponed rather than obliterated. You get to add the disallowed loss to the tax basis of your newly acquired shares. That means the tax value of the loss will be resurrected when you sell those shares. I bring up the wash sale rule in this series of year-end tips because this is the time of year investors are scouring their portfolios for losses to harvest for their tax returns. Remember, you can use capital losses to offset capital gains dollar for dollar, and up to $3,000 of additional loss can be deducted against other kinds of income, such as your salary or retirement plan payouts. Now, tax motivation should never be the prime motivation for buying or selling an investment, but the potential tax saving from selling a loser before year-end might be the final piece of evidence you need that it's time to rejigger your portfolio. Just don't let the wash sale rule spoil your strategy. One final point. The wash sale rule applies only to losses. It's okay with the IRS if you want to sell securities to realize a taxable profit and then immediately reinvest shares in the same company or mutual fund.